Hey everyone, welcome to episode 12 of the Zero Basis Points podcast. We have George Guidotti on the line.
What's up, everybody?
How's
Good
it
to
going,
see
George?
you again.
Let's do a little simultaneous sip for
The
our guest.
simultaneous sip, and before we get into this is Haik and I share a passion for espresso. So, cheers on a
Cheers.
simultaneous sip for the wealth management space.
I think that were we talking about to start this live or to start a live segment of the simultaneous sip sometimes on the website, so we could probably
Typically, I
log
would like
on
to
and do it.
chase with a bubbly Pellegrino,
You're a classy guy.
but I don't have that, nor have I bought that in a couple of years. But
It's a soda stream. It's a soda stream at this point.
So just
well,
trying to look cool for the podcast.
Well,
But
welcome back to the pod. George, I know there's a lot of conversation going on, but let's do kind of the rundown of what we usually do for our guests. Tell us about the fitness journey, and then we'll dive in.
yeah, even the fitness journey and thinking about previous podcasts that we've done, like I'd love to even start talking a little bit more about crypto, because you and I have this like side passion for crypto that we don't even talk to each other about. So it's like, probably make it a part of the podcast again, because I think that was really valuable early on and we lost it. And because we didn't want to be a crypto podcast, but it's a special component. But we like to always talk about fitness as well. And Pete DiLorenzo, I always talk, our co-founder, I always talk about a workout program that he created for me. And I just finished basically segment 2, which didn't feel as, hey, thank you. Thank you. That's hilarious.
Let's start using some. So I discovered, for everyone listening, I discovered the soundbite board before George continues, and I started adding some funny sound bites we can use just to keep the conversation going. And anytime George starts passionately talking, I'll start throwing a couple in. But go ahead, George. I wasn't going to interrupt.
It may move the podcast. The intention was to keep this thing PG rated, but this will probably make it PG-13, leaning R, but probably not R. We figure you're all listening to podcasts in your headphones anyway. So, but from the fitness perspective, I finished this kind of second phase that I didn't find as transformative as the first. A little bit more twisting and upper body and stuff like that. But now I'm on to another phase that's more weights and stuff like that. So I'm excited about the next phase. It feels more in line with what I want to be doing. Like, well, to be honest, the first bunch of workouts were like every minute, like do push-ups for a minute, do sit-ups for a minute, do this for a minute. And you do that for, anywhere depending on what's laid out for the day, between 30 and 50 minutes, to say, with like a minute break every 10 or something like that. I'm now outside of that timed thing, which I didn't like. I liked it at the beginning, but then I was like, it's kind of like there's a lot of like focus on the timer. The Hey Siri said another 1 minute timer, another 1 minute. Hey Siri said a 1 minute timer. I did a lot of that. The beginning, I also tried to do like a YouTube video with the timer. It's tough though. And I know there's apps, but I would rather just kind of roam the weights and focus on weights. I'm not roaming the weights, but just working with weights. So that's where I am now, but still feeling great.
Welcome to the weight world. Let's put it that way, because you're doing a bunch of CrossFit stuff.
Yeah, I always feel like I'm like my pecs and my arms are looking good until I get on a call with you, and then I feel like SpongeBob. Or no, Squidward, actually.
Yeah. No, well, now you'll start lifting the weights. You just have to progressively overload, and then you'll start just filling out.
Right.
That's it.
And anybody following us on the journey that says, oh man, I need to work out too. I hope everybody's thinking of that. All millions of you. We think about all of you. But my goal, 3 kids, is not to like throw out my back doing a layup on the basketball court, I just don't want to deal with, I think, when I was talking, Siri picked up this 1 minute timer.
I was going to say, Siri just put a 1 minute alarm on.
Yeah, that's how long it's been since I've been rambling. It's good. I'm like, I got to stop talking. But what was I just saying? I lost my train of thought.
Anyone who's trying to work out and follow the journey.
Yeah. It's all about just starting and acknowledging. It's about consistency. It's just doing it 5 days a week. And then it becomes part of your life. Everything else kind of starts to revolve around that a little bit. You're like, okay, for when you start your day, like, I got to do it this morning, or I'm going to have to do it before 4 or something like that. If you aggregate how much time you waste in a day, you
Yeah,
can find 40 minutes,
I agree.
guaranteed.
I agree.
I have 3 kids in 3 different schools, and I can find it. I can find that. And they're in sports too. Sometimes the only place you're going to find it is at like 4:30 in the morning.
Yeah. And I think it's such a big differentiator for what it does for your life that it's worth it. So even if you got to squeeze a little in, it's worth it. So
I thought of
th-
like like I needed like a one of those shots, like the cortisone shots in the back because I have this back pain that I talk about when I'm on a long cross country flight or something like that. I wouldn't consider that anymore. So I was just thinking of like a quick fix rather than just what the benefits of exercising for 3 months straight would do for that problem.
yeah, long term, I mean, the structural integrity of your body and everything with enough muscle around helps to get rid of a lot of those pains anyway. So if as
Yeah,
long as you're exercising consistently, you can build a really strong base for that.
it's exactly like investing, you know?
I was gonna say CRM. It's a really strong base, and then just segue into the CRM because I know you're super passionate about that, and we wanted to talk about that today.
Yes. But
So
I was working out is like investing. If you do a little bit every day, it's going to work out. If you wait until you're 60 and your doctor is telling you your arm and legs are falling apart, you're going to wish you had started earlier, you know? So just get out there, take walks, I didn't hear,
yeah,
I missed that when I was talking too loud. I thought
it
I
was the
came from another
Roblox
room.
death one. So, but anyway,
But, but to CRM,
yeah.
my baby, might as
I'm
well be
gonna
my,
well let me preface the
okay. Yeah.
conversation
Go
because
for it.
once you start going, you're gonna go ham on the topic.
Gotta go like this, like stop. Then I'll know to stop talking. But yeah, I get passionate about CRM.
Yeah, and you should, and because you come from that world, and we'll do a little background of
This is
of
actually vodka.
Randall.
It's just gonna relax and
But there's been a lot of conversation both internally at Arca because we are tackling a lot of the problems that are rooted in the relationship of entities, relationship of how you essentially chart out wealth, how it's tracked, who owns it, etc., exposure. And then we have some stuff on the socials like LinkedIn that have been coming up, which have been pretty interesting and timely because they sit at they've come to the platform at an interesting time while we've been talking about it, and I know you're super passionate. So for the folks listening at home, for the millions of listeners, kind of, Grendel was really your baby with the CRM side and everything you did, and I think you're one of the people that knows most about the CRM space, and I know you can talk so much about it. So I'm going to give the mic over to you. I'm going to get you riled up a little with the CRM, and hopefully we can start throwing some good ideas out there. So start.
well, fundamentally, and for what it's worth, I built a CRM and it got acquired. So I've been through the whole thing where I had an idea and then it became, real and then a production thing that advisors paid for to the point that it attracted buyers and, acquired the app. So I went through that whole life cycle. What I see now, and it makes sense, the conversations that I'm seeing on LinkedIn about we don't need a CRM anymore. We shouldn't be focused on CRM. So I don't agree with that. I understand it from even when I was selling CRM. I thought, man, if advisors really just realize, like, when you're doing a data conversion, when you're taking an advisor from their CRM to yours, like, I got to do this data conversion. I've done, let's say conservatively, 3,000 of those. 3,000 where I've like participated in the discussion, touched it, watched it, something. That's conservative. And so when they do that conversion, if the only thing that you can get, worst case scenario, is the contact details, first name, last name, birthday, soch, and the notes, like that's good enough. Okay, we can live with that. Ideally, they want everything, contact information, notes, tasks, calendar events, groups, custom fields, static and dynamic groups, all that kind of stuff. So, but I can understand that if I'm building a tool like even Arca or a financial planning tool, let's just say financial planning tool, because I think that the argument was that they could use a planning tool. This is going back a couple of posts. In a financial planning tool, I can create a person, and then later I can search for that person. So in some capacity, you're getting into CRM. Okay, I can write notes. Okay, cool. But the reality is, while these other apps can consume some of the CRM features, I believe that there's not going to be, the CRM is not dying. The CRM is getting stronger. Wealthbox in particular, I always say, because it's just the most obvious metrics if you're not living under a rock in the wealth management space. Understand the power of the advise on CRM and all that kind of stuff, but Wealthbox is getting all the attention. That's why they just had a $200 million raise. So I think that CRM is getting stronger while other companies are trying to figure out how to fill those gaps. But it's not going to be good enough to get these advisors off their CRM for a long time, because if you and anybody starts a business, the first thing you're going to buy is a CRM.
Of course.
Like, where are you going to write your notes? Like, like a financial planning tool. What if you're not even offering financial plans yet? You're just an asset guy, or you're the rep of a broker dealer, and then maybe you'll do that. It's just like the most low hanging fruit tool that you can implement for your firm is CRM with high impact. So that way you're not losing track of clients and prospects. You can aggregate accounts to them. So all that being said, anything I say so far that you question, I know I've talked, I don't want to talk too long.
Well, no,
Yeah.
one thing I was going to do is I was going to share one of the articles that did pop up on my LinkedIn by a very close friend, James Cantwell, both to Arca, to myself, even prior. And he was talking about stop trying to fix the CRMs. We had that message from John Rourke calling him into the arena to build his relationship operating system. And yeah, in here, he does talk a little bit about the AI note takers that are out there, what kind of the plan is going to be for these. I feel like, having so much exposure to what we've seen in this space, initially we called it AI note takers were a race to the bottom, right? So now I think people are realizing that they have to add something to that function to keep the audience's attention. One of them being the rest of the CRM gaps that exist, because a lot of those note takers are now sitting on top of those CRMs or feeding them notes back and forth. And there was that funny post, having John Rourke up here. I think he made that funny post of the vampire sucking the blood from the CRM system and saying, hey, that's how these note take, and it said AI note taker or something on the vampire. So we know these note takers are out there kind of feeding information back and forth. Obviously, his post was a little more trending towards the fact that they're taking more information than they're providing the value from an AI standpoint. So I think it's a very interesting time because a lot of people are going to question the role of both the AI note takers, and I think now further along that vertical into the CRM space. And, folks like James Cantwell, who I think has been in this business for a long time, is seeing a lot of like what's out there. Did we build stuff? Are we trying to retrofit stuff into the wealth management space that might not apply anymore traditionally? Should we be talking about a relationship operating system? Because that's really how wealth management works. And on our side, I mean, I don't want to maybe we drop it on this podcast or not, but you've been talking about the WRM, right? The wealth relationship manager, or what I call the WERM, worm, just for short, wealth entity relationship manager. So a lot of that type of stuff, you wrote the book on it. So I'd love for you to kind of talk a little further about that and how you segregate CRM from WRM in your mind and where really the differentiator is.
Well, when you start building a CRM, you start basically building an electronic Rolodex. And then when you deploy it to financial advisors, and I'm talking 2008, this is when I was doing this, advisors start using this tool. Oh, now that you have my list of clients, it would be really cool if we could see a list of accounts associated with the clients. So you do that, and I need to be able to write notes. I need to be able to categorize the notes. I need to be able to link the notes with accounts. So like you get into these world where you're like, I'm building something greater than a CRM. And I'm also aggregating accounts. And when you get the accounts, the advisors say, well, if you know the current state of account, can I not upload my models? And you compare and do a model compare. And if you can do that, can you show me the drift? And if you can do that, can you break it down into the custodial format for each of the order management systems to rebalance the accounts? So in the end, and not only that's moving downstream out of the CRM, which you have to understand when you're building a CRM. And because you're in the center of this advisor orbit of all these other tools that you really have to understand. but within the CRM itself. And what we're doing in Arca today and what I've done in the past that I don't see everywhere else, but what we're doing in wealth management as far in CRM parlance is wealth relationship management, because I don't log in and search for a client necessarily and then a list of accounts. Sometimes I log in and look for an account associated with the trust because I have work to do for a specific beneficiary. So it's wealth relationship management. So that's why I called it that. Me and my brother started calling it back in the day, and we used to say we wrote the book. Like, we were the first ones calling it something other than CRM, because like, this is not a CRM. We were doing performance reporting, powered by another firm under the hood, but we were doing it all in one UI. So it's much more than that. When John Rourke, talked about throwing your hat in the arena, the thing about when you see somebody what says it should be an operating relationship system,
Relationship operating system,
a Ross,
yeah.
But like, if you say that that's what it should be, and you keep saying that, and I like John too, but like, it's one thing to push an idea, but then you have like founders who bring them to production. And what does bringing them to production mean? Why would I be so sensitive about this? It means I'm going to start staying up late when everybody goes to bed and work on something that I want to bring to life. And in this case, it's a CRM. And then you get it to life enough where you can see it. And then you've got to bring in some development help just to get it to like in a low environment where you can play with it. And to get that to grow, you're moving into the universe of, I'm going to sell this to a group of investors, not sell the idea of Ross, a relationship operating system, something that's never been done. I'm going to sell this and say we're going to displace CRM. Or you're just going to onboard enough advisors quick enough that you're bootstrapping. And that's amazing too. But if you're not willing to go through that process, then you have to, I don't think that you should be saying that we should be calling it something else or that CRM is going down, because it's easy to say that and have an opinion. But the reality is people who are building the CRMs and actually doing the work might be like, this is why you're wrong. And they might come with a lot of passion, like somebody like me. So I think that even what we're doing with Arca has functionality that is in a CRM. But we all think about how advisors use a CRM. The advisors aren't really using the CRM.
Correct.
They're people that are running their shop are using the CRM, and they want it to do gymnastics that these other planning tools can't do with their data because they don't have it all. And they haven't been in like the CRM like support arena where you're trying to calm down advisors who need a report that does this because they have an audit or something along those lines. So to me, as a founder, it's for somebody to propose something else but not try to build it. It's like, what are you even talking about?
Yeah.
Like, that's
No,
it.
I agree.
That's it.
I agree. I think, when we speak about our wealth relation management, it's always been a question for me, even back in the Adapar days when I'd come across working with clients. Basically, you have a CRM that you're working with, whether, some of the larger institutions had Salesforce, some of the smaller ones had Redtail or whatever, now Wealthbox. Obviously, back then it wasn't around, or it wasn't as popular when I was at Adapar. But all of these things I've always questioned. What is the real benefit of having these systems, particularly when you're thinking about traditional CRMs being applied in the wealth space and the transformation of wealth management and the workflows associated to it? How that gap always existed, and then it just got wider and wider and wider, where there's so much in between that needs to be done, whether it's manually completed, whether it's spreadsheet workflows, whatever it is, RPAs, etc., to just make things work, right? It never went back to say maybe CRM, and I don't mean to ding the CRM industry completely, but maybe that wasn't the right approach when we first started. Like, we should have looked at how, instead of plugging a custom field in Salesforce for a beneficiary on an account that then really did nothing, maybe someone should have thought of a system that said, here's a beneficiary on an account that as of a certain age, something happens with it, or they receive something from it, and I can see it, or I can, do a lot of the analysis between the client relationship to this beneficiary that's also a beneficiary on a trust. I feel like those things were completely missed. And we're at a stage where now people are asking questions and talking about relationship operating systems. And it's like, yeah, maybe, but I think you're still missing. Once you have the schema, what do you do with everything else that's been aggregated as far as tech debt to go back and address it again? And you might have
Right.
some thoughts around it, but
It's wealth and entity relationship management.
worm.
And I saw some. I made a comment on LinkedIn today. Word, you're right. Made a comment on LinkedIn today that said, yeah, everybody's talking about all this. It's going to be called something else. Here's what's happening. The data is siloed. This is every company on earth.
I'm gonna pull up while you're talking. I'm gonna pull up your comment and the post.
Yeah, the comment kind of covered a couple posts, but was relevant to the post that I made it on. I was like, I'm just going to make it here. I can't resist.
There you go. Here's the post. The consolidation myth is dying, and then your comment was right here. Yep.
But and I was saying it's so all this talk about what's going to happen next is here's what's going to happen next. I know because it's already happening and it's been happening for more than 5 years. But every big company and this problem is working its way down market to every firm. But the problem with every big firm is that they have important data that is siloed across several tools. In the wealth management space, call it performance, trading, CRM, planning, custodians. And if we can take that siloed data and bring it into a data lake where that data lake can continuously refresh itself from the data, if not in real time, and then surface the data, that's what a lot of these big companies are doing. And in order to do that, they're going to have to continue to work with the CRMs that they've been working with for so long or the planning tools until they can figure out a coordinated effort to get off of those systems. So what we always say, with when we're dealing with ARCA clients is we're the connective tissue between a lot of your existing applications. And I've said the analogy a couple times. If I was working on my dad's, entertainment center and he had a DVD player in there, I'd be like, Dad, you don't need this DVD player anymore, but he might say, I got this DVD that my dad made me, my pop-up, that isn't web-based yet. I go, oh, yeah, that's right. So we do have to take care of that. So that's just an example of like, okay, well, we'll get that to the web. Not right now for today. I'll leave the DVD player hooked up when I get it hooked up. So that's, you have to address some of the existing tools. And when I think about if we're going to get people off of CRM, that's like getting everybody off of gasoline cars. It's such an undertaking, and it's going to have to be really convenient for everybody to do. Until then, there's gas being sold all day long.
Yeah, I agree. I would say I would question. I think it's completely right. And with everything that's out there today, from the how many conversations have we had about data lakes and folks talking about what it's supposed to do, what it's supposed to represent, and how they're going to work with it, etc. At the end of the day, a lot of it is what you just called out. You're surfacing a lot of the data, you're aggregating and surfacing it, and then it's about doing a bunch of stuff with it. So, which really brings into question the best in breed methodology versus an entire verticalized kind of operation, which I think we're so far away from that. I can't point to one company that I think is going to do that today for our space.
Even when we built our CRM, the most difficult code in the entire application was the calendar. So we got to a point where we decided we're just going to outsource the calendar because that made more sense. And sometimes when you're building a company, it makes sense to outsource different things to best in breed for that particular component and hope that it works in the ecosystem of everything else that you're using. So, if CRM happens to be, and it does, the most important piece when you start a business, then I think it's going to stay that way for a long time. I just don't see it being the thing that gets displaced for a little while.
Yeah. I think better tech will start bringing in some things, but I think it's going to be more of, can you meet what's required, or can you meet the expectation of the client using this type of stuff today? Then it'll be a transformation story into something else, if that. And that's how we're approaching it, right? A lot of what we do, like when we were talking about the worm in our system, was like, hey, how can I have the relationship and what I am used to calling the ownership structure across entities, accounts, clients, etc. And then from there, what does that turn into, and the experience really? And I think that was one of the things that Adapar got right when they rolled out their system. And funny enough, they started with the family office space, and I always talk about that experience because that's how families were looking at their accounts. Their top level was maybe an individual or a patriarch of the family office, then a bunch of legal entities, and then from the legal entities it was accounts, and then securities and the positions that roll up to it. And then once they started going down the RIA route, it was like, well, you just do multiple of these individuals that have this, ownership structure below it. But when you get to a large institution like Morgan Stanley, now you have intermingled entities. There's people that are holding assets that are outside of the system. There's one trust that may have two different managers, and maybe they're both Morgan Stanley, or maybe, wherever they are. So you start talking about the aggregation power there, and that's where you need to almost have this security master application on top of the entities themselves, which really is what I call our worm, our wealth and entity relationship manager. And that's where I think everything becomes very unique and identified. And then from there, it's all the downstream stuff, right? Identify this, show me where this happens, etc. And that's the next level stuff that I mentioned to some of our clients and prospects around Launchpad. What that can really add value to. So I'm excited about this next thing that we're doing at Arca. I'm excited about all the conversation that's going on outside in the world around CRMs.
Me too. And I do want to just say before we get off that topic, if anybody is going to absorb CRM market share, it's going to be me.
I love it.
So, like I truly think I'm like the CRM domain expert of the space. And I told you this, and now I'm going to say it on the podcast. If we had a conference, this is the entire wealth management space where you put us on stage and test us as CRM experts or tech stack experts. I want to be up there in the top 10, and we can bet just like, we do in like March Madness on just like who's going to win this thing. So, I'll go represent an ARCA if I can. If I have to represent myself individually, I can do that too.
We'll back you.
But so, like, I think about this because I built a CRM when I was holding my firstborn son in my 1-bedroom apartment, trying to keep him quiet so that I could get a 2-bedroom apartment. And then I continued to grow that business because I continued to grow my family, and I supported that family with the revenue I was creating for my CRM company. So it's when you get into how passionate founders are at the beginning, I decided to be passionate about CRM because I happen to like love it. And like when you love the details, nobody's going to work harder than you because you like staying up late. And I've talked to you about this before, maybe on the podcast, but even personally, like when I'm working real late and I'm excited, like my eyes start to close while I'm working. I'm like, I'm not sure if what I'm even writing is making sense anymore. Like I got to just stop. So,
yeah, then you can come back to it the next day. But
it's like when you're working that hard to build an app and throw your hat into the arena, that's one thing. When you're staying up late, having an extra cup of coffee so you can finish your thought process on an article, we might beat you up on the podcast.
yeah, well, I'll call it out here. I mean, since
I'm
you put it
kidding
out there.
about that, but
No, but you're throwing your hat in the arena in the sense that, we'd love to have anyone really question what we're saying and what our assumption is and how we think about it and you think about the CRM space, because there's so many people out there. And I mean, John's comment about like throwing the hat in the arena is funny in a way too, but also serious because, yeah, if you have so much opinions around it, like come and build, right? And I think it's very different when you build and you put something out there. I've gone through this life cycle for software at different points in my life, but when you build something and you put it out there, people are going to look at it, they're going to use it, they're going to come back with criticism around it, they're going to feedback, etc. It's a much different environment, psychology, and a lot of people aren't going to agree with you. Yeah,
it's exciting to throw your hat in the ring too. To me, that's the only game there is. To opine is one thing. To get in there and try to change the gears so that this industry does things. That's why I like working at smaller startups. And it's because I can do that. Where I worry with a large organization, it might just take me too long. People won't care enough because they're so large. This brings me to another point that on these articles that I read, but these other large organizations, they are slower turning boats, which was addressed in the article. Like they won't seem innovative to us from the outside, these big technology or even let's say custodians or providers that are sitting on so much legacy debt, they're also sitting on a ton of assets. Like a boat sitting on $1 trillion is going to take longer to turn, and really is going to have a hard time taking you seriously unless you have something in production.
Yeah. No, I think that's a
So
good point
I
too.
don't, some of these big firms, I don't necessarily fault because they have trillions of dollars, because they move very carefully so that no dollars fall off the boat, because they're the ones protecting the dollars.
Yeah, I agree. And it's going to take a while. I mean, yeah, some small firm can be using whatever and talking about it, but the real differentiator is going to be when the bigger ones start adopting it, right? And that's going to be a much longer process. Oh no, I think in the CRM space, I'm curious how the conversations evolve. I like the choppiness of the market a little with the AI note takers and people coming out
Well,
and
some of them
calling them.
made their money.
Yeah,
Like who's to hate on somebody that comes in during a gold rush and fills their bags? Like, all
yeah.
right, all right, you did it, and now it's about surviving. So like, I think that's, the AI note takers were here at the right time, and now it's about innovating and surviving. But like, that's every single business is about innovating and surviving now. So, it'll be interesting to see how they do that. Got some thoughts on what they're probably trying to do. I'm also very focused on what we're doing. So
I'm using everything I see out there to centralize it for what we want to bring to the market, where we want to play as well. And I think it's going to be something interesting, which we'll come out with pretty soon. So I'm excited about that front. I think there's a lot of work to be done. But on the podcast front, at least, speaking so much around CRM, best in breed versus verticalized, we will have a guest on the next pod who will come in and
woo,
talk.
so you don't have
Yeah,
your
I
sound
gotta
effect.
actually hold on. I don't know if I should do the single audience, clap. Just-
More our style.
yeah, more our style than the other one, but just to crack jokes at ourselves. But yeah, we'll have Craig on, which we've had so many conversations with Craig in the past around this space, and he's really coming at it from the RIA side, and I think he's had a vast experience in the market,
And
that
we're
it'll
talking
be
about Craig
interesting.
Uhlenkopf.
Correct. I just avoided saying his last name because you have more practice saying it than I do.
Yes,
So.
I do. Known in the industry in the product space is Craig Yu. He'll
Yeah,
have more to tell us about his history, but for me, he's all green. He's a TD Ameritrade institutional guy. Veil One, which was the most beautiful thing happening in this space. It really was.
agreed.
And Schwab bought it and sunsetted it. Boo.
I gotta look. Yeah.
So
Denied.
any type of future progress they were trying to make, it was
yeah.
pretty much cut at the
And that
knee.
talent, which got interesting because a lot of that talent went to places and you're using their apps today. We'll let Craig talk about that. But the people on Veil One, went somewhere and you're using tools that those guys built. So it's cool. And Craig's one of those guys, and he's done a lot more than just TDAI, TD Ameritrade Institutional. We're very trained to say TDAI. You can't say TD Ameritrade in the wealth management, it's TDAI.
Yeah, no, it's gonna be awesome. I'm looking forward to that one. I want to hear kind of his war stories and everything that he's been up to, and I think he has a very good kind of positioning in the market of what he's looking at, and a lot of RIAs themselves can want to find out what others are doing, right? And there's so much. I talk about this a lot, but I think he puts it into a very concise way of thinking about it. But everyone was pitching AI out there, same application. Everyone thinks that your data is ready to go with AI, or your firm is ready to go, today with this and that. There's so much work to be done to even just get your ducks in a row. And I think he does such a good job of explaining that process and how he thinks about it, that I think our listeners would benefit from it, especially some of the RA listeners, independent RA listeners. So I'm looking forward to that. And we'll hopefully do that in the next episode with Craig Yu. He should just start a little app called Craig Yu, and it's like your practice management as an RA. You just
Yeah,
log in.
nice
It's
friendly
Craig
app.
University.
Yeah.
Yeah.
Give you a nice explanation as to why, like nice curated thought process as to why what you're doing next should be this or that.
Yeah.
But yeah, Craig is very well. I'll let Craig speak for himself. But I'm
We'll have him
excited to
on.
have him as guest number 1. That's a big deal. So
Yeah, for sure.
excited about it.
And our podcast is evolving. We'll have the first guest, and then I'm sure we have a list of a couple of folks we want to get through. But Craig's going to be an exciting one, and he's
Sound
West Coast, so
effects, sound effects,
sound.
first guest.
I know there's a lot going on.
Yeah, we're getting real, dude.
Yeah,
So a couple people have been asking about sponsoring, so we just need to get everything buttoned up and just make this thing, bring on guests more regularly, which will be exciting. So I'm really
it's
looking forward to it.
exciting on all fronts. Well, George, thanks so much for joining me on episode 12. I'm excited that we'll have a third on episode 13 pretty soon. And thanks for our listeners for keeping up with the journey here.
All right. Talk to you soon.